Hey, welcome back. You know how with a majority of companies the pandemic, the war, inflation and everything else that happened in the past years delayed their expansion? Well, ADM was the opposite. This company, as virtually every commodity company out there, gained a lot thanks to the volatility generated by these events. However, today, despite the price of commodities being relatively high, the company is already getting in trouble. As you are about to see, there are serious fundamental issues other than the accounting problems revealed recently. But with a roughly 3.5% dividend that's been increased for 51 consecutive years, let's see if this might be an opportunity or not. ADM makes money from processing and offering various services related to commodities. They make all kinds of meals, flours, flavors, oils, ingredients and so on, and have hundreds of facilities almost everywhere on the planet. They work with giants like Pepsi and Nestle, so from that point of view they are doing pretty well. The idea behind the investment is very simple: more people, more food, stable growth in the long term. They recently had a scandal that made the stock crash by around 20% in a single day. The division that's under investigation for accounting issues represents around 10% of the company's revenues, but it has the potential of hurting ADM much more than that. Anyway, even without it, ADM has much bigger fundamental issues. As a commodity company, it's normal that the cash flow and the profit and everything depend a lot on commodity prices. Right now, commodities are relatively high following the spike from a couple of years ago, but from the looks of it, they might normalize in the near future. The big issue is that if this happens, we know that ADM is losing a ton of money. Even at the current price, which again is relatively high, they probably have a negative cash flow, which is not what you want, especially from a dividend payer. And you know, for a company that's investing like 1 or 2 billion per year, you can't expect that much to change. The company has current assets of around 30.5 billion, which is roughly 5 billion lower than 9 months ago, but this is overall enough to offset all the liabilities, which is very good. Here we can see a $500 million increase in long-term debt, which unfortunately might only be the beginning. Now, a very big issue: how much are these inventories really worth today? You simply can't rely on inventories with commodities. Corn, for example, almost tripled from 2020 to 2022 and then crashed in half 2 years later. ADM doesn't add too much value to the commodities that they process, and stuff like oil, flour and so on usually follows the price of the original commodity. I know, not in the store, but on the commodity market it does. As a cyclical company, if it took them an exceptionally good year to return a free cash flow that would put them at a ratio of 10 or so, there are some serious issues. Sure, if they sell the inventory they can cover the debt, but then still the company is just bleeding money unless they have some exceptionally good years. I think that if it wasn't for the war, the dividend would have been cut by now, or maybe they did some kind of spin-off, but this is inevitable unless something big changes. What if we see the negative part of the cycle for 10 or 15 years? This company would literally go bankrupt. Ideally, cyclical companies are always producing a positive free cash flow, especially if you want to rely on that dividend, and a really good one in good years. This one is just bringing barely positive or even negative free cash flows in normal years and good ones in exceptionally good years. And keep in mind that it took a war between two very big players in the agriculture industry for ADM to have this good year. I'm going to use the data the company gives us, but who knows to what extent these accounting issues go. Don't get me wrong, it may as well be nothing, but if there is even a small thing, this can be terrible. If they lose the trust of their investors, the stock would be in very big trouble. ADM also bought back shares recently, with the stock being at all-time highs, which is probably the worst way to spend the company's money. At the current prices, this means that in 2 years they wasted around 1 billion, which would have been enough to pay the dividend for a year. Look, even before these issues, I said that this company is not that good. Sure, following the crash it's a bit more attractive, but now you have another risk to take into account. Probably an even bigger issue for the stock, the dividend history means nothing if they cut it at any point in the future, quite the contrary. So there is a risk from the accounting issues, plus at any time a dividend cut would destroy the stock price. They basically force themselves to pay something that in this industry is simply not sustainable. In general, you really shouldn't count on constant growth from a cyclical industry. Yes, they paid it for so many decades, but no matter what happens, they now need to pay that 1 billion and even increase it every single year. What it means is that during bad times, when other companies make a fortune by buying assets at a cheap price, ADM has to get debt if they want to do that. Today, for example, that debt is very expensive, but they wouldn't have a choice. Well, they do, but again, if they cut the dividend, the stock crashes a lot. That dividend is almost the same as the company's capex during a normal year, and it's, relatively speaking, for the industry, not even that much money. And if they keep growing the dividend at a compound annual growth rate of 9% for another 10 years, they'll have to pay around 2.3 billion per year. Can they keep up with the dividends growth if they only invest like 1 billion per year? Now, if they don't grow the dividend at least something like a 5% rate, why did people buy this for a 2-3% yield when treasuries paid you like 5-6% during the same time? Another downside is that they don't even pay special dividends, so all you got from that amazing year was like a 3% dividend as usual. Meanwhile, many other commodity companies pay in one single good year pretty much what you get from ADM in a whole decade. And look, talking about issues, this isn't even the first scandal for ADM. It could, however, become the biggest in decades, which makes this even less attractive for me. As for evaluation, let's look into the low, middle and high parts of the cycle and see what ADM could do. We can see that the price of corn is actually a very good representation of the company's cash flows, and it's overall very similar to other commodities. So in the low part, which might be coming in the near future, they can lose as much as 5 to even 8 billion per year. How much would you pay for a company that's losing so much? Maybe if you buy it and sell everything, you have around 10 billion in net property, plant and equipment and around 8 billion in other investments. I'm not counting the goodwill, by the way. This is assuming that you use the current assets to pay all the liabilities. However, you have inventories, unrealized gains, derivatives and other investments, and who knows how much they would be worth today. Not to mention the accounting issues. So cut the 8 billion to account for a potential loss in value of the current assets, not to mention that this 8 billion might also be worth less than that if you want to sell them, and you have like 10 billion worth of assets that's losing money. And who knows how old they are and if you can actually sell them. So buying this just to close it and sell everything, I wouldn't pay more than 5 billion because, I'm taking a massive risk and I also want to make a profit, but let's say 10 billion. That would be a stock price of 18.75 for a loss of 60 something percent. However, that would be today. What if this happens in even just 3 years of this scenario? They'll have to pay that dividend and keep running somehow, so they will need to get debt, plus the assets will depreciate, so that 10 billion might not be there anymore. So how much would you pay for it then? But the rating agencies, some of which had a pretty significant role in the previous financial crisis, give them an A, so nothing to worry about, right? In a scenario with prices like today, they would make between -1 to let's say 1 billion, but let's round it to 1. That's not even enough to pay the dividend, so they would still probably need to get a bit of debt, depending on how long we remain around these prices. For a ratio of 15, which is pretty generous, but I don't want to get to 10 billion again, that's a market cap of 15 billion for a stock price of 29. That's a loss of around 40-50%. And again, the dividend is not sustainable and they'll have to raise it. In a very positive scenario, let's say they get to 5 billion again and the market is trading them at 15 times that amount. But again, keep in mind that it took a war with massive implications on the industry for ADM to produce that much, so the chances of them getting to such numbers again are very small. That would be a market cap of 75 billion and a stock price of around 140 for a profit of around 170% plus the dividends. Considering what it takes for ADM to get even close to this kind of level, this is not attractive at all for a commodity company. This is not the worst company out there, but ADM's risk-reward potential is really not attractive at all for me, especially when other companies, even in the same industry, come with much better prices and potential. When I invest in a commodity company, I want the downside to be as low as possible and the upside almost unlimited. This is not the case for ADM. I'm sticking with my entry target of something like $30 for ADM that I had a couple of years ago. Some of you might think this is too low, but this is now closer to the current price than the peak from less than 2 years ago when I made the previous video. To be honest, even 30 is probably way too much. In that case, the dividend would be at something like 6.7%, which is definitely attractive, but how sustainable is the current dividend really? Is it a temporary issue? Is it maybe overblown by the market? Maybe, but the previous price was already very inflated, also thanks to the buybacks, and even now I don't see too much potential in ADM. The opportunity cost was better than what ADM offered 2 years ago, and it's still better even today. I simply see no reason to buy this today. And again, if we get into a bad scenario for 5, 10, 15 years, ADM will have a terrible time, and this is not what, at least I, want from a commodity company. And you know, if I'm wrong, please let me know, but from the looks of it, if you scratch the surface a bit, this is not a good investment. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.